9 reasons why the stock market could crash in 2022. The world economy has undergone many ups and downs over the last century, but one thing that remains constant is the day-to-day volatility of the stock market. Over the course of an average year, stocks can fall by up to 50% in value and then nearly double again in just a few months. If you're planning on getting into the stock market or are already invested, it's critical to understand what factors could trigger an imminent collapse of your chosen stock portfolio. Number 1. A housing crisis could trigger stock market crash. The U.S. housing market is on a tear right now, but experts warn that prices could easily tumble back down when interest rates rise. That would have a domino effect on other markets and could trigger a stock market crash. Number 2. Political unpredictability could trigger stock market crash. Tensions between North Korea and South Korea, Japan and China could lead to war. The instability would cause stocks to crash as investors flee for safe havens like gold. Even worse, cyber attacks might exacerbate matters by hacking into banks or governmental agencies to cripple them. Imagine waking up one morning with no access to your money or bank accounts. Scary, those who haven't prepared could be in big trouble. Number 3. A currency crisis could trigger stock market crash. Imagine a run on a bank. It happens when everyone wants their money at once and can't get it, so they flood to other banks. The same thing can happen with nations and when everyone wants out of one currency. Nothing is left for those who want to stay. That could cause a stock market crash, along with inflation and recession. Number 4. Huge rise in interest rates could trigger stock market crash. Central banks around the world have cut interest rates to record lows and have bought trillions of dollars worth of bonds and assets. But it seems unlikely that central banks will be able to hold interest rates down for much longer, as there is a growing consensus that an era of low rates is drawing to a close. Number 5. Crackdown on internet freedoms could trigger stock market crash. Authoritarian governments, security breaches, and high levels of inequality could spark a global market slump. The global economy could be tipped into a recession as early as next year if stock markets are plunged into turmoil by any one of 10 major events over the coming months. Experts have warned. Authoritarian governments cracking down on internet freedoms, a wave of cybersecurity breaches, and rising inequality threatening to trigger political instability are among those listed as most likely to cause a financial crash in emerging economies, where businesses and consumers increasingly rely on digital commerce. Number 6. China's economy falters. The Chinese economy has been slowing down for years, which many economists and investors believe is a good thing, given that China had been driving global growth through exports to developed countries. But should things start falling apart in China, which has more than a few moving parts, the rest of Asia would likely follow suit. If China's economic problems trigger political instability, especially if it sparks a trade war with the United States and other Western nations, that could send markets into turmoil. Number 7. Another major cyber attack. This threat has been on our minds ever since a global cyber attack crippled computer systems across 150 countries earlier in May. The malware, called WannaCry, took control of computers running Microsoft Windows by encrypting files and then demanding a ransom for their release. While nothing like that has yet happened again, it was only a matter of time. Many countries are still vulnerable to attacks, including America, and we should be prepared for more damage to happen soon. Number 8. Trade war between China and U.S. A trade war between China and U.S. would inevitably slow economic growth for both countries. If we do see a trade war, you will likely see other countries launch their own policies against U.S. imports to support Chinese interests, making it even harder for U.S. exporters. There are a lot of moving parts to these negotiations, so even if things start looking better, there's no guarantee that tensions won't flare up again. Remember how much global financial markets hated uncertainty. Number 9. Inequality pushes people towards populism. As inequality continues to rise, those left behind by modernization will continue to seek out politicians who promise them simple solutions and make them feel like they have a voice. As elections become more polarized, it's likely we'll see even more populist movements around the world. Populism is much easier to harness than complex politics. In conclusion, there are many reasons why there could be a stock market crash in 2022, some more speculative than others. But one thing is certain, that even though these reasons may seem far-fetched and nonsensical now, they will be on every investor's mind should there be a market crash next year. Even if there isn't a crash anytime soon, it still serves as an excellent lesson for anyone who would like to learn how to invest in stocks or simply get familiar with how markets work. The big picture takeaway from all of this: we live in volatile times, and no one can say for sure what will happen tomorrow, let alone 5 years from now. Thank you for watching the video. Make sure to subscribe to our YouTube channel, and you'll be the first to know when new videos are posted. Take a break with one of these amazing videos today.